The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We were supposed to have a Mr. Stan Harley on today, but he just called me and said there are bears in the woodpile, and he was really swamped today, so we'll have to catch him next week. And I told him, I said, you will never be invited back. And I said, no, that'll be fine. So we can all understand that. Folks, pay close attention to this chart. This is the one we posted yesterday. We also posted it on Monday. But if you'll take a look at this, the 38% retracement came in at 40.89, and we hit that. We had a nice rally of about 15 points, and now we've gone below it. That's a very bad sign, folks. When you make the 382 retracement in just a few days, that tells you that this market is probably going to drift a little bit lower. Anything below 40.40 would set up a situation that you don't want to see if you're long. So just be really careful in here, folks, because I know the CPI thing came out, and whether that means anything or not, I really don't know. I'm just looking at charts, but they're talking about the fact that the inflation, the gig is all over. And if you'll take a look at one of the charts that came in today, you'll see we had an ABCD there on the daily lumber chart. It's limit down right now. We've been down 2 days since the high was made on that big ABCD, and that's all we know about that. The last time we had something like that, lumber dropped well over $250 a square foot, which is not much in lumber. I don't trade it. I'm just showing you the patterns, folks. That's all I'm looking at. But one of the things that's very important is the next one that come up. It comes from the legal department that I think you folks will enjoy taking a look at this. I got this yesterday from one of our friends over in Florida, and I had to laugh so hard I just couldn't believe it. So anyway, let's keep a look at what we're watching. We'll get to these European markets because they have the same setup that we're seeing here in the U.S. Here is the FTSE on the 60-minute chart, as you can see that. And then we're going to also take a look here at the DAX. I thought you'd like that, Marshall, and everybody likes it. It's just a joke. Anyway, let's move on. And basically, what the joke? If you're in your car and you can't see the joke, it basically is what do you call these guys? A divorce judge. He's got Bill and Melinda Gates in front of him, and he asked Mrs. Gates. Mrs. Gates, what was wrong with your marriage? She says, I can sum it up in 2 words: micro and soft. Anyway, that's the way it looks. So anyway, it was kind of funny. All right. Of course, divorces are never funny, but those people are different than everybody else. They already told us that, and so we can have a little bit of fun with them once in a while. They have fun with us all the time. So let's just look at. Here's another one, folks. It's very, very important here from the inflation standpoint that we've been watching quite a bit. You'll see it right here that we had this copper situation going on right here. It looks like we could be looking for a pretty substantial break in copper. A lot of these things. In fact, look at the gold market, folks. Had an order to sell the gold about $4 higher today, and of course, it left me at the wedding again. So that's what we looking off. Yeah, she took some money off the table, Cindy. You're absolutely correct. To the tune, I imagine they had a prenup, but who knows? Rich people act differently than most people. Now, if you'll remember here, folks, this NASDAQ, if we went down to this level here, going below the level that I'm posting here in the NASDAQ, that's the level we hit the other day, and then we had the rally. So if we go below that 13,100 level, I haven't been able to check the NASDAQ because I've been too busy doing other things. We just had a grain report that, shot the soybeans up and down in a 25, 30-cent move in November beans in a matter of 10 minutes. So we'll have to be able to see how these things unwind as we go through. Now, this is what I talk about all the time when I'm doing these charts, and I just want to show you last night what we were looking at. This was in the middle of the night. As you can see, it was about 1:30 in the morning, New York time. We were making a beautiful ABCD pattern. It's the first ABCD that we've had. And we went from 41.10 all the way up to 41.46. And from 41.46, we went from 40 all the way down to 40.80. Bear with me here 1 second, folks. My alert minder is going crazy, and I need to know what it is. And it is the S&P just going lower and lower. We got a little bit lower, folks. It's going to be pretty nasty today, so be really, really careful here. It's going to be interesting to watch these things unfold for sure. So those are just a few of the things that are on our mind today. We got the gold at 1821. And just a lot of things just are happening. Anyway, you'll notice on that chart that I just showed you the ABCD to the downside, the ABCD to the upside. And if you did some simple calculations, you'll see that ABCD was just nearly perfect. And that's the basic of what I try to look at, folks. I listen to all the news. Like, that's baloney. You know that for a fact. I don't know what's happening in the news. I know that CPI number comes out because I wanted to see how the market acted into that CPI number. That's all I was waiting to see. So those are just a couple of things that I'm keeping in mind here. We just had a really strong rally here in crude oil. We got up to 66.5. We're just broke $66 a barrel now. And the thing to watch today, folks, is to watch the S&P. We've already broken below one standard deviation, two standard deviations in the NASDAQ, one standard deviation in the S&P. This is telling you that there's selling come into the market, folks. And now what it's doing is giving you a little bit of fundamental news that, oh, yes, the CPI number is 4 times what they were expecting. They were expecting 0.2, and it came out 0.8. Folks, I've been watching them play with those numbers since 1976, 1977, when Paul Volcker took over at the Fed. The very first thing he did with his CPI numbers was to take out food, and then later on he took out energy. Are you kidding me? Give me a break. You know, they manipulate these numbers, you know. But that's my 2 cents worth. And if you pay me 2 cents, you've overpaid. Okay, any questions that anybody has? I know the lines are totally lit up right now. It's 877-927-6648. And so we're looking at, yes, Mr. Greenspan. All of them do, folks. That's what they do. You know, that's what statisticians do. That's, hey, you know, a great thing there, Duffy, a great thing. Now, guess what? They can give you all that information they want, but they can't hide from you. Guess what? They can't hide from you. If prices are going up, there's more buyers. If prices are going down, there's more sellers. So that's the key to what you're looking at, boys and girls. So keep in mind that that's what's going. Same thing in the grain markets. We just had a report came out, and the markets are now 10 cents lower than after the report. They rallied 10 cents and then dropped 10 cents in the November beans. So that's it. I can review the natural gas, Bo. That's a good one to look at. So bear with me here a second, and I will get this natural gas up here. It's actually try English, Larry. It's actually a little better here. Let me get this up here so we can see it. We're right up here. Hey, we'll take a break and we'll be right back with natural gas. We'll be right back. Hold on.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have John from Michigan on the line, I believe. John, how are you doing?
I am doing great, Larry. I love your changed schedule. I'm now able to give you a call in the afternoons on my work
Not as
schedule.
much as I love it.
Happy that you're 3 hours later.
What can I do for you, buddy?
Well, I want to say last week you were talking about the gold and silver in relationship to open interest, that the open interest exploded to the upside in the gold, but it hardly moved. You said maybe 700 contracts in the silver. And I hope maybe you could go into that today for us.
Sure. What I do, whenever a market breaks into new high ground or new low ground, I go to the open interest. I go to CME.com. I've done a video on this. If you drop me a note, John, I'll be happy to send it out to you. And it shows you how to do it. It's really quite easy. But if prices are going up, and there's more buyers coming into the market, that means open interest will be increasing. But if prices are going up and if prices are going up and open interest is dropping, that means shorts are covering. In other words, the shorts that are in there are buying their positions back. They're leaving the market. That makes the open interest drop. That means the markets are weak at that time. That's what we've been seeing now, other than the one day where we had the big increase in open interest in the gold on a day that it really didn't do very much. We had a 20,000 contract increase. But yesterday, we all had a nice move in gold, and by golly, the open interest dropped again, and the same thing in silver. So that's what I try to do, is to look at it from a standpoint of when it's making new highs and new lows. If it's in the middle of a range, I don't even check the open interest because it doesn't affect me, because I look at the charts, John. You know me. You've been with me for a long time, so I can understand the ABCDs and that stuff. And after that, it's beyond my pay grade. So that's how I use open interest.
I agree with that. I know what you mean.
Yeah.
I know what you mean. So, today I watch a little bit of Bloomberg, and all they're talking about is that inflation exploded to the upside based on what the expectation was. And yet aluminum is down, gold is down. I'm looking at silver's down like 35 cents, the June contract or July contract. So that also tells you that something's wrong, doesn't it?
Yeah, it sure does. The markets, I've been saying this in several of these markets, they're just not acting like that it's supposed to go in the direction that you think it should go. I mean, lumber is it's in la la land because not many people trade that. That's a commercial market. But if you look at the cattle and the hogs and even the soybean market and the corn has been in a really bull market. That's been going up. But almost all the others, look at the Treasury bonds. Here we were telling about negative interest rates, and now they're talking about 2.5%. I mean, give me a break.
Right.
I mean, these things have been going down they've been going down for 7 months.
You mentioned lumber. Can I throw this in? I was listening on the radio yesterday, and a guy was talking about in 2015, if you were a building contractor and you wanted to build a house, and he didn't say what size. He said you could build with $50,000 worth of lumber, you could build 14 houses. He said today the number was 2. You could build 2 houses for $50,000. He didn't say what the size of the home was, but to give you an idea where inflation in the lumber market is.
Yeah, I know. It's really quite amazing. But we have trying to do a little bit here in the house with some stuff, and the guy came in, and his quote that he gave us just a month ago has been up by 50%. And part of it is just you can't get anybody to come and work in your house because they're all so busy.
Try getting a contractor out to your house.
Yeah, well, you can't. It's easier to get a doctor than it is to get a contractor. Yeah, so don't get sick. You can change, you have a better chance of fixing your house than you do going to the hospital. But the hospitals are pretty much empty. But anyway, that's what's going on here in Tucson. So hopefully, I hope you enjoy your 3 days of summer while you're in Michigan.
Should I email you? What's your email address?
Yeah, just it's a tough one. LarryPesavento@gmail.com.
Okay.
And what I'll do is I have
remember that. I'm only 71. I'm a kid compared to you, right, Larry?
Yeah, I'll send it out to you, pal.
Hey, thanks very much. I appreciate it very much.
Yeah.
You have a great day now.
Yeah.
Bye-bye.
Okay, folks, I posted a chart of the silver rounds that we look at. These are 1 ounce pure silver printed by the U.S. government, minted, not printed, minted. And folks, I've never seen this before, but silver selling for around 26 and change. And here we have these rounds are going for $39.50. Folks, that's a 38% hickey premium on these. I mean, that's just unbelievable. There must not be very many of them around for those to be that expensive. I've been bullish on these when they were around $14, but now where they are, golly, with a premium like that, something's not right. Now, getting back to the gold market, I've been talking about this, and today was the day I had all my sell orders in, and again, they didn't quite get to the area that I wanted to get to, but this is going to be a really key week here, because if we close below 1810 in the gold, this is the June contract. We were trying to sell it today at 1850, and it didn't get there. Got to 1844. We're now trading at 1821, but we still have a chance to get there maybe Thursday or Friday. But if we don't get there and it closes below 1810, this is going to be a very, very negative situation, because you have open interest dropping, contracts dissipating, and not only that, but you're in a downtrend. Look at this from the high that we made in 2060. That's a long-term 135 pattern. That's a dynamite bearish pattern. So you've got to be extremely careful when you're looking at these, because these markets can go a long way. And please, I could be totally wrong in the S&P, and maybe we're going to rally and look really good at the end of the day and stuff. But right now, going below those numbers is very, very important. And the fact that we backed up, we've rallied about 10 points since we've been on the air here, which is pretty good. But if you'll keep an eye on it, it's going to be interesting here, because we've got a situation that if we close below this 4080 level, that's not going to be a good thing, because the standard deviation number was 4080, and also that was the 382 retracement. So it's going to be quite interesting to see if it's going to hold that up or not. We'll have to wait and see, but we always wait for a lot of things, and mainly for the patterns to complete. If you have any questions, folks, it's 877-927-6648, and I'll be happy to answer any questions that you might have, and if we can, and then we'll see where we go from there. All right, folks, we'll be right. Oh, we haven't. The break is not yet. Let's just take a look. Let's try to get that chart for July natural gas. I'm not involved with that, but I'm going to get that chart up to make sure we have it corrected, because it's something that several people have asked me about it before. And let me get this up here, and we'll hopefully get this and see where we are, because that'll give us a, nope, that's not the right one. For some reason, I'm still showing I don't want to get involved with that, because the natural gas is at a point where I want to be able to tell us that we're at in the right contract. And in the middle of a show, I don't want to be bothered with that correctly. Anyway, we've got the gold trading at 18.23. The low's been 18.19 so far today. It doesn't look very good, for the rest of the day, but, who knows, things could change a lot. But the main thing is to remember that we're looking at several of these things that look quite interesting. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I put the chart of the U.S. dollar index on here. By the way, that chart that we were talking about with the natural gas, that is the high volume and the highest open interest. So that's correct. I don't know what the July looks like. I don't trade it very often, but, it's been up at this level. If it's broken out to the upside in the July, that probably does mean something, and I will check it after the show is over today. Okay, by the way, those of you who were expecting Stan Harley, you can imagine imagine with the market as crazy it is today, Stan is rather busy, but he said he will try to get back to us next week on the first day that he's able to do it. Tomorrow we're going to have John Person as our guest. John's always really got some great stuff. Friday I will not be here. The old doctor is taking me in for my physical. As you get to be my age, you get a quarterly physical, and I'm feeling relatively good for being at the 8th furlong, and we'll see what's going on. I'm not going to give you the winner of the Preakness this week. You should be happy that you only lost $2 on the Kentucky Derby, but that's the only one I bet anyway. Okay, and even then, who knows who won the race? I really don't know. But the fact that this U.S. dollar exploded to the upside, folks, given that number that was there, was really amazing. I think partly it was so oversold that it's sitting right there at the 78% level and, jumped up quite a bit. So we'll keep a look at it, and we'll be able to look at it. Marshall has just posted that the NYMEX natural gas futures is showing you what the difference is between the two. So thank you, Marshall, for doing all that good work. We certainly do appreciate that. Okay, now if we take just a moment to discuss what's really happening in the market, folks. We had that big 3-drive pattern up there at the 42.37 level. And by the way, that's where Maria gave the sell signal. We posted that 3-drive to a top pattern, and she had the order setting there. We were looking at it in the den at the time. And who would have thought that in 3 days later we would be at the 382 of the whole range of the month? And remember, we're coming into an area where the strong seasonality exists. And one of my favorite people in this business, and has been for the past 57 years, has been Larry Williams. And his forecast this year, when he brings this out in January, you'll see that he was looking for the market to come in the first or the second week in May. That would be that second top that's in there. So if that's the case, he's looking for, several months to the downside. He's not saying this is a crash or anything like that. He's just saying seasonal. It's selling may go away. And if you historically look at that over the last 110 years, it works a heck of a lot of the time. So whether it's going to work this time or not, I don't know. But something's happened in May here that make the market move lower. And how much lower it's going to go is anybody's guess. In fact, several people ask me, what my prediction would be. Folks, I don't like to predict. I like to follow and keep my stops as close as I can. But if we look what happened back in February when we had when we got the gift that keeps on giving back in January and February of 2020, you see the market broke really hard. You'll see it came right down to the 50% level, and then it went from 286 in the S&P all the way up to 315, and then boom, then the hammer came to it. So what we're watching for those ABCD patterns that we're looking at, just like the ones we were watching last night. And sometimes they work, sometimes they don't, and that's it. I would like to mention that regarding the 24/7, folks, I'm trying to work it out so that we can get these things out to you in the middle of the night and stuff, because I know some of the folks in Hong Kong and also the folks in Europe and Denmark and London and Switzerland and other places can get these ahead of time and give an idea of what we're looking at when we're seeing some of these things unfold here. So I hope that gives us a little rough idea of what we're looking at when we're following these things here today. By the way, if you have any questions, 877-927-6648. Regarding Apple, we're going to bring that up here right now. Duffy was asking the question about it. Here's what the 2 cents worth is in Apple, folks. This is a continuation of what we were looking at yesterday. We went down to the 127 level, and we were looking for a rally possibly to 128.60, and all it could do was rally up to 127, and now we're below 122, and we are heading to 119, folks. Look at that. You've got it's really pointing in that direction. I mean, it really says that's where it wants to go. So I wouldn't be a buyer of Apple until it gets down to the 119. Just remember, just on the end of last month, on April 30th, we were looking at a market that was trading at 138.50, right at the 78% level. And here we are 20 handles lower, not quite 20 handles. We're 15 handles lower. It looks like we're heading towards the 17 handles lower. It looked like we're heading to 119. So that's all these things are. They're just nothing more than that. Take a look at this chart. I want to show you this chart because we had David Paul on yesterday, and David posted an absolute beautiful picture of the Wyckoff system. And the Wyckoff is nothing more than the stuff that John Hill taught me, how many years ago was that? 50 years ago when I met him in San Francisco. Basically, if you can see these little gold lines, these are nothing more than swings of ABCDs, folks. All I did, is give them names like butterflies and Gartley. That's all I did. Fortunately, it caught on, and part of the reason was it works relatively good. But that's what we're watching here, and that's the same, that upthrust that you're looking at is the same chart that you're looking at with Apple. It's heading down a little bit lower, and that's what we try to look at. So I hope that helps. I try to make it a little simple as possible as I can, but not all the time. I appreciate all the support we have here at TFNN because it's always helpful to have people that work hard. But boy, the folks in the den here do a fabulous job. Let me tell you, they do just a fabulous job of telling the folks how to do things, and it's just really quite great. So I'm very, very thankful for that. Regarding those silver rounds, they're the United States of America, $1 gold pieces, silver pieces. I would wait on that because that premium is just out of sight. And the only reason that is they've got to be in short supply because of the fact that those things are they're not rare, folks. They're just bullion coins, and that's why they're so good. That little coin there is basically a bullion. You don't have to have it assayed or anything like that. If you have a little silver bar, the coin dealers, they have a way of checking really quickly, but the easiest way to do it is to buy the silver coin with these minted coins, and you'll be able to see them as little pieces of bullion, and that's why they're so good to pay very close attention to. That at least you remember, get in and out of it. You can do it really quickly. I wanted to bring one other chart up, and that was the chart of, hold on just one second here, and that is the one that is most important. And let's get this up here because we have totally reversed what we were looking at last week. Just give me a second here. This is that major 1.618 expansion that we have up here, and we flipped over, and now we're headed down with a gap, which is another reason to be really, really careful in here as we look at this. I haven't checked the prices here coming in here, so we're probably getting ready to do some more running around, but one thing at a time. And that's about it, I think, what we're looking at. So 10-4, 10-4. Okay, do you remember when I started the show last week on Monday, I said I went through all these charts, and other than soybeans, I couldn't find soybeans and corn were the only two really super bullish charts. That's the only two I could find of all the commodities. So who knows? 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, we're going to take a look here at the British pound versus the U.S. dollar. We looked at this last week, saying that you might want to be prepared to take a look at it. If you'll notice the ABCD pattern, it measures to 141.68, which is we're now down 100 handles from where we had the sell point in there. And you'll notice that 0.84, basically that is done by the Ensign software folks. It goes out to the 100th, well, actually to the 1,000th decimal point, and that makes it pretty valid. But usually 0.8 is close enough to 0.786. But the difference here, the 786 came in at 41.15, and the ABCD came in at 41.60. So what you like to do is to try to match them both up together. But a good way of looking at this is if you count the number of days between the 12th and the 20th, you'll see that it's 8 days. And if you count the number of days between May 3rd and May 10th, and you'll see it topped right on the 11th, right where it should have. And it made a little bit higher high from the 10th, and you can see where we are here on the 12th. We've dropped down 100 points, and looks like we're heading lower. And that's all these patterns are doing, folks, is they're trying to put you in a position where you say, okay, I don't know if it's going to work or not, but by golly, if it does work, it's going to make some money, and if it doesn't work, I'm going to be out of there. And that's the whole 9 yards. And I really I don't know any other way to describe it other than that way. So I hope it's simple enough. I wrote books about it and stuff, but let's just look at this chart for just a second here. Since we don't have Stan today, we'll do this ourselves. Look at the high back here on the 22nd of February. That's the highest part on this chart. If we count the number of days down, 1, 2, 3, 4, 5, 6, 7, it came down 8 days. Then it rallied for 4 days. Then it came down 1, 2, 3, 4, 5, 6, 7, 8 days to the down. The absolute bottom right there. A, B equals CD. And then it goes up for 8 days and comes down, then it goes up for 8 days again. Then it pulls down for 8 days and goes up 8. Don't you think there's some type of harmony in there that you can make yourself some couple of bucks on it? That's really all it's about. I don't know any other way to say it. And the reason why I'm joking about it is somebody called me this morning very early. It was like 6 o'clock my time, which was, well, I guess it was 9 o'clock in New York, and was asking me about it. Well, is it still a valid pattern? And I said, well, yeah, it's valid, but I said it's 100 points away from where the trigger mechanism was. He said, well, I don't understand that. So I tried to go through this with him again. And the reason why I'm doing it now is if he doesn't understand it, there's probably a few others. And I've written a book about this, well, several books. But the Trade What You See book will cover this so will the Astro Cycle. All the books I measure, I talk about it because that's the basis of what I do. What I do is so darn simple. I don't use any fancy oscillators or anything like that. I've never had any luck with the darn thing, so I'm not really really keen to using them. So I hope that makes some pretty good sense here. We're down here at 40.74 now in the S&P. I see, and that's it, folks. We have got a really big situation going on here in these Treasury bonds. I hate to be a bearer of bad news, but if you're expecting anything more than a small rally in these bonds, I think you're going to be disappointed. And the reason why is, look at this last rally that we had here on the 10th. You'll notice we went right up to 160. Folks, we're at 155 today. It's dropped 5 handles. That's $5,000 in 3 days coming off of the 382. That's not a bullish sign. If this is a valid 382 and we go below 153, do you know the price that we'll be looking at? We're going to be looking at bonds at 141. Now, I know you're not going to believe in 141, but that's what the ABCD measures to. I don't know if it's going to go there or not, but the fact that it came off of here like a rocket, we're the 61% retracement of this whole move back from the low we made on the 3rd comes in at 155.13, and we hit 155.25 today, so a little bit lower. We might get down to that. Maybe that'll be something to hold it, but right now, it doesn't have any friends, and for sure that's correct. Okay, 877-927-6648, and we'll be 1 second. Someone's asked another question about the hold on 1 second, about the euro, and that is we hit that level up here. Let's just get this up here so we can see it, and you'll notice here our buy price down here is at the 118.73. We went right up, took out the highs. That was that dollar index where it made a new low at 90.07 on that day, and then it's completely reversed and heading down. And so we're looking at it to come down to about that 118.70. We happen to have the position on in the British pound. It missed our euro. Well, I missed the euro because I couldn't get the video out in time, and so I didn't get a place to trade for the 24/7 people. But this is what we're watching. When you see a big, absolute smashing upside day like this, where you make new highs and you don't go anywhere, oh boy, be really careful, because those are the ones that are, really, really going to cause you a great deal of trouble here. Okay, we got 2 more minutes till the close here. I wanted to get this up here to talk to you just a little bit about the this NASDAQ here on the weekly chart here. We had a high of 33,715. We've been all the way back down to 13,100, I believe, so far. And it looks like that, we have broken below all major support. So we need to pay attention to those, folks. The fact that the market could break below the 382 retracement in the S&P in just a matter of 3 trading days, that's not good. That's not good. It's really good. It's that is a very good one. Dollar Bills tell us, and the Dr. Paul stuff is he's such a nice guy. Oh God, he's a real pleasure to be around. He's funnier than a one-arm paper hanger, but he's really a nice guy. And I owe my good friend Tom Hugard the what you call here. Let's get this S&P up. Someone asked me to take a look at the S&P here. There's the 3-drive pattern in the S&P on the cash. That's where we came in Sunday. And then, of course, Monday is when we had the tiny bit higher high Monday night, and then we rolled over, and now we are rolling over big time. And that tells us that we're going to go a whole lot lower, boys and girls. Whether that's going to be the case or not, I'm not sure. Another one that is in very, very dire straits here is if we take a look at these Treasury notes. We hit the 382 exactly there on Monday, and then, away we go to the downside. So there's another one that looks interesting. There's where you get your number to come in on the notes at around 125, if that's the case. That's a problem with some of these ETFs, folks. They're easy to get in, but sometimes they're harder to get out. So remember what Dr. David White says: sell when you want to, not when you have to. So that's important. The first mistake teaches, the second mistake kills. Your first mistake is you're wrong in the market. The second mistake is you don't do anything about it. And that's usually the difference between the neophyte and the beginner. The doctor is in the house. Mr. White, call in. Give us a question. Or give us the answer. I'll make up the question. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, and we've been kind enough to, from our friends across the pond, to send us a picture of the NASDAQ. Folks, the low we made the other day at 13,100 was 2 standard deviations. It was also right at the 50% retracement. We then rallied up to the 382 at 13,380, and now we've broken down. We're heading for 3 standard deviations, folks. That is down around 12,900, just a little below the 61% retracement. Folks, if we go more than 3 standard deviations down in the market, it's in big trouble. I mean, BIG trouble that starts with a C, ends in an H. I hate to use that word, but that's the kind of thing that you could look at. Go back into March of last year, you'll see on the way down, you see those big red bars on the way to the bottom. That's as you're breaking down through 1, 2, and 3 standard deviations. And 4 standard deviations sets up 1987. So you don't want to get involved with that. Just be careful. The reason why we did that book, the trading, the Floor Trader's Handbook, is it mathematically proves that ABCD patterns work, and it shows you the value of calculating the standard deviations of these moves, because it helps you determine when the trend should hold. That's why the importance of that 4090 level today in the S&P 500 was very, very important. Now, if the market rallies back, that 4090 should act as resistance, if in fact it's going to do that. Tomorrow, our guest is going to be John Person. He's a very dear friend, and he really knows these markets really well. Friday, I will not be here. I'll be under the old sticking me with the old, examine the old body as I reach the 8th furlong pole. And then next week, we're going to have Norm Winsky on the 21st, of course, and I will have Stan Harley on next week early. Unless the markets are as crazy as they are now, then we'll have to reevaluate where we stand. So just remember, folks, try to help your neighbors, because there's still a lot of people are having a lot of trouble. I've never seen so many homeless people here in Tucson. 877-927-6648. Stay tuned. Got some more good folks here at TFNN.